Are you earning money from Facebook monetization in Kenya or planning to monetize your content soon? This video is for you. So many Kenyan creators are seeing new tax updates in their Facebook payouts, and there is a lot of confusion online. So let's clearly explain what is happening and what it means for you. What has really changed? Facebook, through Meta, has introduced a 5% withholding tax on earnings made by Kenyan content creators. Who is affected by this change? This applies to creators earning through the in-stream ads, ads on Reels, Reels bonuses, and other Meta monetization tools. So why is Meta doing this? This change is happening because Kenya tax law now requires tax to be applied on digital content income. So Meta is required to deduct this tax and remit it to KRA. So important clarification, this is not a new tax return. It is withholding tax, something many people in Kenya are already familiar with. The tax is deducted before you receive your payout, and Meta remits it directly to KRA on your behalf. That is why Facebook is now asking creators to update their tax or KRA details. This ensures the tax deducted is recorded correctly, matches your KRA records, and helps you avoid future tax issues. What should you do then? If you're monetized, make sure the tax details on your Facebook payouts match the details on your KRA pin. Don't ignore these updates because they affect how your income is recorded. In my next video, I'll show you step by step on how to update your KRA tax details inside the Facebook monetization settings. Finally, understanding tax is part of protecting your income as a creator. Don't forget to subscribe for simple, clear explanations on tax and online income. Thanks for watching and see you in my next video.